wondering about retirements in Canada.
Gotcha.
Right, we'll get this loaded here. Give me 2 seconds. I put OBS. All righty. So the first thing I feel like we definitely have to get into is going to be the new loan program.
Right.
What are your thoughts on that?
The FDIC Treasury solution to bail out the losses on the bank's portfolio. Yeah. So I mean, it's interesting. I so the ultimately when you look at what's going on with the U.S. banks, it's a lot of the issues are because when they dreamed up the solution to 2008, they didn't really think things through very well. The idea was, well, we need to have banks better capitalized. We need to have them have more capital on hand. But it's expensive for banks to keep capital and not use it, which is the whole, it's always been a reluctance to, if you look at the Basel III Accords or whatever, the idea is like, what's a good percentage of working capital to have on hand? Is it 4%, 8%, whatever? And so they've had these risk weights derived of how they do it, and they've always given very generous weights to bond portfolios. So if you have treasuries, there's no haircut at all. You basically get 100% valuation for that. So you can have bonds on your balance sheet and you don't get penalized as a bank. But on the other hand, you're running mark to market risk by holding securities on your balance sheet. So they said, okay, well, don't worry about that. Well, if you don't intend to sell them during the life of the maturity, then you don't have to pay. Don't have to worry about realizing any costs. You just will take that off your income statement and you'll be fine. So okay, well, so I've got two classes of securities. I got securities that I could use for transactions, and I got securities I can hold till maturity. And those hold to maturity will be basically counted as tier one capital at 100% weighting. So great, I can go do that and make a capital gain on it, and also don't have to worry about the capital risk weightings that much. So that was their solution. It's like, yeah, well, U.S. banks are well capitalized; they have lots of liquidity, but if you're going to basically put these bonds to maturity, they're not really liquid, are they? Because the assumption is you're never going to sell them, and that's the root of the problem here. It's like you've encouraged banks to basically load up on bonds, and and consequently, it's like, yeah, we don't have to worry about mark to marking the risk on that. And so some banks that should have known better took advantage of that far more than they should have. And we don't have to rehash Silicon Valley stupidity, but I mean, it's a not just a one bank issue. It's like a lot of the smaller banks were like, yeah, this is a great way for us to grow, and we can basically just buy the treasury bonds, and that our hypothecation of assets we can grow because we don't have to restrain our capital. We can offer loans and other things. So anyway, the gist of it is that they all didn't expect or didn't believe that the Fed would be consistently raising rates as much as they have been. So it's like, oh no, the Fed's done. It's going to look at Treasury yields inverted. That's the precursor of a crash. Oh, the Fed's going to pivot. Oh, Jackson Hole's coming up. Though Jay Powell's going to announce a pivot. So every few months last year, it's like, yeah, the Fed's done. The Fed's about to pivot. So we don't have to worry about swapping any of our we don't have to hedge this stuff because the Fed's going to reverse. The Fed can't revert. I mean, sorry, the Fed can't keep hiking, and the Fed's not going to stay hawkish. Well, Jay Powell had a mission. He ruined the credibility of the Fed. He was the most recent among many Fed governors who have ruined the credibility of the Fed. And yeah, I'm going to go back as far as Greenspan. So Greenspan, Bernanke, Yellen, and Jay Powell. They've done a number on making the Fed seem very uncredible. So yeah, Jay Powell's basically said, I got to do what I got to do, which is what I'm supposed to be doing in the first place, is make sure inflation doesn't get out of control. So it doesn't matter if they crash the economy, I got to do this. And so I think that change of pace from the Fed's our friend. There's a Fed put there, it'll save the market. Yeah, he's going to pivot. And as a result, all these stupid regional banks, they basically never did any interest rate swaps because while the accounting for these bonds in the hold to maturity is not, you don't have to worry about capital gains. If you do an interest rate swap against that portfolio, the gains and losses on those interest rate swaps are on your balance sheet. So, if you've decided you're going to hedge this risk and you put on a bunch of interest rate swaps, and then the Fed does start cutting again, then you're going to start to show massive realized losses on those swaps. So meanwhile, you won't, those the unrealized losses will go away if the Fed starts cutting. But now you've got interest rate swaps on your books that are costing you money. So that's why you didn't see a lot of these banks hedging this risk. So people asking, well, why didn't they hedge this risk? And I basically have answered, like even my boss at work, why didn't they do this? And I said, well, they were under the delusion that Powell would cut, and the other why didn't they hedge is because it would, if the Fed did start cutting, it would cause them to show losses on their income statement, which they would not like because they were right about the bonds actually increasing back in value. So it just like it was a moral hazard. The easiest thing to do was not to hedge, and the easiest thing to do is just hope the Fed would eventually, you know, cut again. And, based on historical precedent and having an inverse treasury curve, at some point the Fed would start cutting again. But what they didn't anticipate was that, the average American depositor is not stupid. I mean, they assumed they were stupid. So in Canada, I wouldn't say every bank, but when the Bank of Canada hikes, at least on the commercial and corporate side, when Bank of Canada hikes, they adjust their deposit rates to reflect that. So every time the bank hiked by 50 basis points, the accounts that I look at, they go up by 50 basis points. And if they don't, then I'll switch to another bank that is raising the rates. So, but in the US, the banks seem to have not had this competition for deposits. It's been very easy with all the liquidity. It's like, yeah, we don't really care about your deposits. We'll give you a crappy rate. And when the Fed starts hiking, it's like, yeah, we don't need to raise our rates. They'll still stay with us. And it's true. It's like, for some reason, between 0 and 4%, depositors in the US were happy to be taken advantage of. It's like, yeah. But all of a sudden, 5%, oh, Treasury bills paying 5%, money market ETF paying 5%. What am I doing in deposits? And that's really why this seems to have come out of the blue. This has been a problem building for, until in at least a year when rates started going up and liquidity started drying up. But it wasn't until the depositors actually started voting with their money and leaving the banks that this whole duration mismatch on their balance sheets and the over reliance on hold to maturity bonds has come up. And so, yeah, as a result, here we are. It's like they need liquidity now because the depositors aren't, I'm sticking with my 5%. Oh, Jay Powell saying he's going to hike again. Like, they're not done. Well, then I'm staying in my, treasury bill thing. Why would I stay in deposits? I can put more money into more treasury bills as soon as they hike. So yeah, the drain on deposits isn't going to stop, and they basically were going to be forced to sell bonds and again realize big losses. And so this facility comes out of nowhere. But again, if you think about the basic underlying principles here, this is no different from what the SCC was creating with the pawn shop rule for equities. It's basically like, I don't want to sell this stuff because I take a massive loss, but I do need the cash. And so, yeah, I'm going to park this bond here and I get 100% value for it. And yeah, that's awesome. So you're giving up the collateral, sure, and collateral's scarce, and that's one issue. Like, when the Fed is, you know, I guess what I'm saying is the thing like the reverse repo account is genius because it provides collateral to all the people that put their cash there. But the opposite side is, well, this whole thing about parking collateral at this new treasury facility will drain their ability to keep their shorts and all this other stuff. So this is again buying them time. It's like, yeah, we well, sorry, it's not buying them time, but it's buying them liquidity. So the fact is they need the liquidity because the deposits are going out the door. So it really is kind of like a stopgap measure. But the idea, in my view, is it's very similar to the pawn shop rule. It's a stopgap thing, and you look at the utilization of it so far, and they basically, you've only taken about 5 billion out of it, and huge going to the discount window instead, which has always been there, right? The discount window has always been available. It's just the optics of going to the discount window when no one else was singles out. Like if Credit Suisse was going to the discount window, no one else was. Credit Suisse is in trouble. So that's why no one really uses it. But if everyone's using it, that's fine. But now the whole point is this bond thing. It's like, well, I'm not going to use that unless I really have to, because the market's pouncing on anyone that's suspected of like having, hold to maturity losses of significance. So yeah, like I'm not going to use this window. But so it's there, and it's backstopped from the stabilization fund, which is this murky Fed account, which is what they use for intervention purposes, and probably what the um, plunge protection team uses to finance their index trading on Chicago exchanges. So on the futures exchanges. So it's interesting. It's like I said, the Treasury basically said, yeah, we don't expect that we'll ever need to use the backstop, which is basically saying they never expect that people will actually take hits, defaulting or whatever, not being able to buy back the bonds. But yeah, like they're basically have a 1 year term facility on this thing, but I worry like anything that the Fed dreams up is going to be like, oh, your maturity's coming up in 3 months. Oh, well, why don't we just extend it for another year? I mean, they did this for the emergency US dollar swap facility they created in March 2020. It's like, oh, it expires in September 2020. No, we're expanding another 6 months. So all these programs seem to have indefinite lifetime. So yeah, if you're parking your bonds at the Fed and they got a 50% loss on them, you probably would just happy to have the Fed like warehouse those things for as long as possible. You get like double the liquidity that you would get if you sold them. So it's like until those bonds go up in value, they have no reason to want to recall them. So you're going to leave them at that stupid facility. So again, only the optics of using it in the first place is what's preventing a lot of people from these banks from doing it. But I mean, sorry, I've rambled on a lot, so we'll leave it at that. But I think it was a good solution, but it's only a stopgap.
Yeah. So going on with that as well. So you can see that they're picking and choosing who they can use and use the bailout to. Do you see this now having runs on smaller banks, local banks, because they're not going to get that bailout, and you can see depositors going towards the bigger banks? And do you see this giving bigger banks a lot more power now, because basically all their collateral is back now in deposits, no matter what?
Yeah, and I'm sure you've seen it. I'm sure a lot of people on Twitter have seen it. There was I guess a video of sort of testimony of Janet Yellen before Congress, and I can't remember the senator that was questioning her, but he went after her very aggressive. Yeah, basically like she's saying, well, we bailed out SVB and Signature Bank because they were systemically important, but not every bank is going to get this guarantee. And he said, well, who decides what's a significantly important bank? What's the yardstick? And she waffled, well, it's like the heads of the FDIC and myself and a consultation with the president. It's like, so basically there's no, like, it's up to you subjectively. There's no numerical thing like 200 billion in assets or more is significant. No, because then any bank under 2 million would automatically be targeted. So she's left it ambiguous, which she has to. But on the other hand, it's not very confidence inspiring. So yeah, like all the smaller regional banks are now basically exposed as being, well, the Fed, Treasury may or may not support you. And so I tweeted somewhat sarcastically a few days ago. It's like, Janet Yellen, I'm the one who decides who lives or dies. And it's just like you go back to Hank Paulson back in 2008, and he bailed out Bear Stearns. And then he told Dick Fuld at Lehman, no, you're on your own. Sorry, man. We tried, but no luck. And then a week later, he bailed out AIG. It's like, how did you decide that Lehman wasn't worth saving, but AIG was? And it all came to, well, AIG was systemically important, and that the regulators back then didn't have any freaking clue how important it was. That's how bad things were. I remember it was like a joke. But anyway, the regulators still haven't learned, because this whole episode is a disaster as well. But yeah, it's basically given a target on all the smaller regional banks. It's like, we're going to basically lose all our depositors over 250,000, and they're going to go to systemically important banks. And I mean, you could see what happened with First Republic Bank. they were obviously the next to be targeted. And why are they targeted? And the other thing is, yes, you look at the balance sheet of some of these regional banks, whoever doesn't have a large amount of hold to maturity bonds couldn't even use this facility. I think that's why First Republic was targeted, because they didn't actually have a lot of collateral they could post with the Treasury. So it's like, yeah, you're a target. And oh, well, then, Janet basically hamstrings Jamie Dimon and a few other CFOs of the systemically important banks says, hey, like, we need you to show some confidence in First Republic. Why just First Republic? Why not why not PNC, or why not SunTrust Bank or any of the other banks? No, it's just First Republic, because they're the ones that are it's like, it's total reaction function. There's no planning here going on. It's just like, oh, let's react to the fire that's in front of us. So we don't care about the one that's behind me. So am I critical, Jen? Yeah, yes, I am. Anyway, so this is the problem. It's like, now we've got this continual pressure on any deposits over 250,000 are going to go to the systemically important banks. So we're going to force the systemically important banks to give back and give, First Republic 30 billion. But it doesn't help the situation. Liquidity, it does, sure, but it's like, the underlying message is that all the regional banks are still going to get drained over time. So it's like, yeah, share price of First Republic continued to drop. I don't know what it was closing on Friday, but I mean, it's debacle, and that's the problem. It's like, some people say, oh, it's not moral hazard, but like, there is a moral hazard problem here. There's many problems here. The regulatory issue that allowed this all to develop in the first place, but is a problem. But now Janet Yellen has basically opened Pandora's box, and it's basically like, there was a rule in place internationally for how you'd treat deposits. Like in Canada, I think it was 100,000. I don't know if we've raised it to 250, but you basically, yeah, like, anybody wants to be insured on an account. Well, if you've got over 250,000, you'd have to open up multiple accounts. If you got $10 million, maybe you need 20 different accounts at the bank. And I'm not even sure if it's under the same name, whether that would even be covered. So, you could do all these weird accounting things to try and insure yourself. But the fact is that every bank in the world operated on the same sort of deposit insurance structure. And when you decide arbitrarily that, this bank's systemically important, and there's, again, Signature Bank in particular is problematic. At least with SBP, you say that, yeah, it's 200 billion. But there, between SBP and Signature Bank, there are like 20 other banks that were probably bigger. So why is Signature Bank systemically important? I still don't really see how it is. I haven't been explained to me why their investments in crypto are systemically important to the U.S. banking system. But if they were, why was Silvergate allowed to run out? It's like, there's so much inconsistency here, and I think that's what's causing the crisis of confidence. It's just like, the Treasury is making it up as they go along, and to some extent that's understandable. But on the other hand, it's like, these problems were not totally out of the blue. It could have been foreseen years ago.
Plus, doesn't this kind of make it so these smaller banks then will take on more systemic risk, so they can get that bailout maybe as well?
Mm-hmm. Yeah, their incentive is to either wind down all operations, because they will have to pay more for capital now. So they either have to acknowledge that they will not be able to exist, or they just try and get as many deposits as possible from everyone by paying ridiculously high rates. And then they go invest that money into Luna NFTs or whatever the hell they think is going to get a good return. So yeah, their incentive here is to grow as big as possible, as fast as possible. And again, that's not intelligent, but that's what Janet Yellen has done.
No, I agree. That's what I posted the other day. She's basically telling you guys, either be a big bank or get the hell out of here.
Exactly.
So I mean, this is not going the good way here in any way, shape, or form. So leading into this, I wanted to go into the Fed Now program that's launching in July in the CBDCs. What do you see coming from this release of Fed Now? And do you see CBDCs very shortly on the horizon in the United States?
I was thinking all about this. So Fed Now, like a lot of people say, it's not a CDBC, it's an alternative to a CBDC. And they have very similar characteristics. Is one like a Trojan? Is it a Trojan horse for eventual digital dollar? I don't know. I have a hard time thinking about it, because like in Canada, for example, like my payroll, it's same day. I don't get a paper check. I get it put into my bank account, directly from the payroll service, and it's all pre-programmed. And it happens instantaneously. So for Pay Now, I'm like, people say, oh, it'll speed up people's that have paychecks and stuff like that. Well, I guess I know, like, it depends on who you're employed with and stuff like that. But I'm trying to understand how this is different from how things are already going in Canada, but maybe in the US, like there's a lot more automation that still needs to be done. But ultimately, yeah, like the idea is instant payment. So, like for example, when I get a cable bill, um, I have my credit card tied to my bank account, and so I just say, okay, I will pay this bill using my credit card. It goes through my account, automatically gets debited by the amount of the bill. It's instantaneously. However, if I say I'm going to pay you by a bank transfer, it still takes 2 to 3 days. So I guess that's what the issue is. Is like and again, I'm not a tech expert. I do not understand why certain payments can be done instantaneously and some, even through the same bank account, will take 2 to 3 business days. And it's strange to me. But yeah, this pay now is basically instantaneous payment, and I think that's, that's not a bad thing. I think that's where the world is going anyway. So I don't think it's like by itself it's ominous. It's just it's actualizing where things should be. Just like equity settlement should be T+0, it shouldn't be T+3, right? But it does have the similar functionality of what a digital currency could have in terms of instantaneous payment. You know, is it a gateway drug to a digital dollar? And I'm not an expert enough to have a firm opinion, other than to say it will, as people get more comfortable with instantaneous payment, then yeah, it's like just like anything in technology, we're inching our way to a digital dollar. So it certainly won't make a digital dollar hard to do. It's not like it's gonna, like you have one or the other. Like I said, if you have Fed Pay, does that preclude a digital dollar? I don't think it does. But is it as enabler of a digital dollar? I'm not sure either. But I do know that like people like that, we're not going to be able to say no, stop this. It's just a function of how the world's evolving with payments. And I just think it's kind of overdue because I said I already see it in part of my day to day life anyway. But yeah, it is just one step closer to that digital dollar day. And again, everyone that's aware is probably thinking digital dollar is this part, like yeah, this could be helpful, and then the total dread that goes along with everything else associated with it, the control aspect, the social engineering aspect, all the stuff that we've sort of talked about before. But it's like say, oh, we got to stop this, we got to fight it. I don't know how you stop it though. That's the problem. It's like they're it feel like you're in a room and the it's getting smaller and smaller as a room. So the life we used to know is, I don't know how we fight that, I guess is what I'm saying.
No, yeah. I mean, I don't really know how to stop it either at this point. The rest of the world's trying to enforce it, and when they all do, and obviously they're going to try and enforce it here as soon as possible, just so they could keep up, is what they're going to say. I figured they would do this in a form of a stimulus to make us accept
Yeah.
it, and that's what I think their ultimate goal is to get those CBDCs in, so they can get their wholesale CBDCs, and that way they can keep the market going
Yeah.
and keep liquidity going and printing that. What are your thoughts here on the CFTC for giving those swaps and telling them to delay reporting?
Yeah.
I was just
And
curious about the regulators.
yeah. I mean, ultimately, it doesn't change the exposures. It just means that they don't have to be accountable for dealing with, I said it's like, oh, like look at this report. It's like based on your risk profiles, you're under collateralized by so much. You better go do some, selling and margin call some clients to get back up to scratch. So that issue, and you raised that when I commented on your post. That is true. It's like this could have delayed margin calls at a crucial time. The problem is we have no way of knowing what those calls would have entailed as to who would have been credit. Would it have been caused a squeeze for us? I don't know. It is like, I guess the ex bureaucrat, the ex central bank guy can see this going, yeah, okay, it's an unusual event, and we saw this with city of San Jose. Like everyone was making a big deal out of Wells Fargo missing a money market payment, but that was city of San Jose, who obviously got impacted by uh, Silicon Valley Bank having disrupted their banking, right? So it's like you can sort of give allowances, and that's what regulators will always do in this situation. It's just like a margin call. You get a margin call, even Robinhood with their margin call from the DTCC. It's like, hey, well, you need 3 billion. It's 5 in the morning. I can get you 1.7 by 3 o'clock. Okay, so it's like there's it's you have these stupid rules, and they're never like you think it's ironclad, but it's like there's always wiggle room, and that's what I think they're sitting here going, yeah, we need your reporting, but okay, there's an exceptional event. We'll give discretion to let you not report immediately. But I think, as I said in my post, I don't think that's something that can be continued for weeks and weeks and weeks. It's like, hey, we've given you some lead time, get on with it. It's just like when you get called by a creditor and say, hey, like you're behind in your hydro bill, we're going to cut you off if you don't pay. It's like, oh, well, can I like get an extra week? Okay, we'll follow up in a week. That's how it goes, right? So it's
Kind of like that county not paying Wells Fargo. I posted up.
yeah, and that was the thing that surprised me. It was like, um, why the hell would a municipality not make a payment? It's uh, like that's a government entity. They have tax bases, and it's like the only thing they would explain it. Oh, San Jose is right in whatever the valley, right? Silicon Valley.
Yeah, they use that bank as well as
Yeah,
hearing.
that made sense. So that would be a situation where I would not expect that to happen again. Um, but yeah, like it's like in general, cities don't miss payments like that. They have a taxpayer base. They can go to the secondary market and issue CP, which is exactly what this was. It was like they had issued commercial paper probably for 2 or 3 months or whatever, and it came due, and just the bad timing. It's like very embarrassing. I'd hate to be the treasury group at San Jose, but again, you probably should have, if they're your main bank, you probably should be aware of what had been going on. But there's a lot of people that had their heads in the sand, and I can just see the municipality treasury person is it's not a Wall Street guy that's aware of all the rumors, right? So it could be just like, oh my God, what happened? But yeah, I've met a lot of municipality treasurers in my career. It's like some are very smart, some are not. So yeah.
Yeah, they're all city workers still. So one of the questions is with margin requirements. This is from somebody else here. With margin requirements pushed back, the swaps being pushed back, the repo program, the new lending program. Do you think that there will ever be too much of a systematic risk in the United States for a crash to happen, or will they always keep coming up with new facilities?
Yeah, like I said, this is the one thing I got asked a question on Twitter the other day, and I got annoyed when I didn't answer it. But it's like, they're asking me directly, do you think that all time high numbers are ever possible again? It's like, when we were discussing this squeeze back in 2021, there were a lot of, obviously their reaction to January was to take away the buy button, and that was not a good solution. That was a really stupid solution because it just exposed a lot of conflict of interest and moral hazard and everything else. So I think they had time to sort of realize, okay, this is a problem, and I'm not even sure what kind of conversations were going on between the DTCC and the SEC about, hey, we got to get all these rules updated because we need more collateral, we need to have this pawn shop rule and all this other crap. And well, I said, if you're going to update these rules, aren't you going to use them? And of course, the pawn shop rule's never been implemented, and I wonder why. And it's like every time I sit there, the only conclusion I have is even with the pawn shop rule, a squeeze, they've done it to too many companies in too much size. So it's like it sounds like I'm talking like Mel Gibson in conspiracy theory. I'm totally wacko, but there's the only explanation is like they've really shorted so many companies to such a large extent that to try and clean it up with pawn shop would still cause a systemic problem. So how you got to keep finding ways to bail things out, but ultimately you're creating money to do this. You're creating money out of nothing. And the frustrating thing is like, yeah, if the squeeze had happened, they probably would have been government intervention, and they would have had to write a check out of nothing and paid us in digital dollars or whatever anyway. But the only problem is it's delayed things for us. It's caused pain for people, and instead of us getting the digital dollars, it's being wasted on sustaining zombie investment banks like Credit Suisse. That, like I said, it's irritating to me because it's like, yeah, I'm impatient. I think eventually we will get some sort of resolution out of this, but it's like I don't have a clue if it's going to be better than what we had seen in June 2021, or if it's going to be significantly better, or what. Is just too many things have gone on in the last 2 years to really have a really firm view on how this will all get resolved. Other than the fact that they will have to print money out of somewhere, and yeah, like, sorry, I'll just leave it. I think they have to print money, and that's why I'm sort of still bullish on gold and silver. And of course, I made a comment like that yesterday, and all these Bitcoin people started chirping in. And it's like, okay, I'm not even going to argue the point. I think Bitcoin is going to stay around, but I'm not confident about crypto until A, Tether's gotten rid of, and B, we see how the authorities plan to stifle crypto, because it's clear that they're plotting against crypto. So I don't want to get too excited about Bitcoin until I know what their actions are going to be, right?
Yeah. So thoughts on Credit Suisse getting bailed out by Swiss National Bank, who had a 143 billion dollar loss, and then they said that the taxpayers were already going to be thoughts on the nationalizing a bank.
Yeah, like this has taken all my mental energy on the weekend, to be honest. And
Sorry.
it just keeps on going. Excuse me, I'm drinking Coke to try and keep my mental processes up because I got brain fog still. But anyway, yeah, like this thing, where to start? So the Swiss National Bank, um, they are an unusual central bank in that they basically do every country every country has a central bank. Obviously, a central bank has what's called the reserve fund to fund intervention if they need to support their currency. Like the Canadian Bank of Canada, when I was there, it was only like 14 billion. Now it's something like 70 billion, and it's all vested in mostly safe fixed income bonds. Whereas the Swiss National Bank is way more aggressive. There used to be, I don't even know, it's so long ago. In the 90s, there was Bank Negara, the central bank in Malaysia, that was like almost like a hedge fund. And Swiss National Bank seems to be acting a lot like that in terms of their investment policy. They can invest in almost anything, it appears, equity wise. So they have AMC ownership, right? As far as I know, they bought twice in 2021. I don't know what they did last year if I haven't bothered checking, but so they've been long AMC and they never sold. Um, but they buy a lot of stuff, and then they would have bought Arc, probably Arc. They would have bought Tesla. They would have bought everything under the sun because they had a lot of ammo. And look at equity markets. Yes, last year, and they would probably also have bought fixed income when the yields were much lower, and so they had the same problem as all the other central banks and same problem that banks have is you buy a 30-year bond. I mean, the Swiss issued a 50-year bond in 2018 that had a negative yield, and I'm sure the Swiss National Bank was supporting that. So they have all these huge losses from all these bad investments because like everyone else, they apparently didn't expect the Fed to be so aggressive. So yeah, their equity losses have been huge. And yeah, I mean, the question is, well, where are they getting the money to get all this? Well, they're the National Bank. They can print Swiss francs if they need to. And here's the thing: the Swiss have been like this. It does change over time, but for the last 20 odd years, the Swiss have been seen as a safe haven flow. So anytime there's a market disruption, you will be buying Swiss francs versus everything except maybe the dollar. And even then, sometimes the Swiss outranks the dollar in terms of safe haven flows. So there's been a lot of capital flowing into Switzerland as a flight to safety. And so the Swiss don't like this because the Swiss franc gets too strong. And, they had a peg with the euro about 10 years ago. And yeah, again, I could have researched this and got the exact dates. But anyway, they were trying to basically sustain a fixed exchange rate between the euro and the Swiss franc because the Swiss franc was getting too expensive. And eventually, even that is like, okay, we just can't maintain this. We're going to have to let the Swiss franc strengthen. And so that was a big FX disaster for a lot of people that have been betting on that peg. But anyway, so they have a lot of dollars coming into Switzerland. They need to basically repatriate those to keep the Swiss franc from exploding higher. So they've been forced to go invest in everything under the sun, and that includes AMC and everything else. Question I have then is, yeah, like that's fine. And again, they can print Swiss francs to get, to buy US dollars, to buy AMC or whatever they're doing. So these losses to the bank don't hurt that much, despite the size of them, because again, they can print money. So with, with Credit Suisse, though, oh my God, um, there's a long involved, like, okay, the biggest thing is the Swiss banks before you guys were born, before I don't know who's listening, but for 100 years, the Swiss were basically the, don't ask, don't tell. We'll take your money. We don't want to know where it's coming from. We'll keep your identity secret. Therefore, it always attracted a sort of shady clientele. And as we got into the late 20th century, after I got to high school and university, it's like, you know what, we don't necessarily want, you know, the Swiss to have the ability to hide, this money from people. So we need to have Swiss banks be more transparent, and being sort of being sort of forced by the international community, they finally opened up and said, "Yeah, here we're transparent." Oh, we had money for Nazis and all that other stuff. Yeah, we admit we did bad things, but they tried to clean up their reputation. But there's always lingering doubts, and Credit Suisse has never been a Boy Scout. And there was. I was just looking at it this morning. If I can make sure I have the. Oh, that's the wrong story. Yeah, major scandal 2016. God, I don't have. Yeah, okay, there it is. They're still accused of basically keeping accounts for all kinds of nefarious people, such as ousted dictators and everything else. So that was like, okay, this is revisiting the past. And Credit Suisse claimed they were cleaned up, but they're still, 2/3 of their clients of dubious origin are still from 2020. So it's not like these are, grandfathered accounts, and they're still accepting dubious accounts. And then there's the infamous case 2 or 3 years ago where a branch manager in Bulgaria was taking suitcases of cash from uh, a basically a narco lord, and again alleged to have South American connections. So they were basically money laundering for the drug cartels. And then there's all kinds of other PR stuff that's really slide them. They lent to a developer called Greenswell, the huge losses, and they were supposed to be like monitoring the wind up of that, and they didn't really pay much attention to it. And then there's Archegos, of course, where they were shown to not care at all about their risk management, and basically where everyone was too generous to bill. I mean, they were particularly lax in their. Basically, what came down to is the head of the prime brokerage was the boss of the risk management person. So anytime risk had an issue, it's like with Archegos. So we're making too much money off Bill Hwang. Leave him alone. Even though Bill Hwang had basically been a problem character already and been banned from basically running a hedge fund in the U.S. So it's like all these kinds of disregarding for risk, and it's just piled up and piled up. And they were sued. Sorry, they were fined like 475 million for bribery scandal in Africa like last year. And there's so much lagging doubts about this enterprise, and it just became too much. And of course, we can go back to our first space call we did last fall, and we were talking about UBS, Deutsche Bank, and Credit Suisse. And on that call, I believe I said that I expected Credit Suisse to fail within a year and probably be bought out by UBS. So it wasn't that hard. We basically made these calls based on the credit default swaps of the three entities involved. So it's kind of funny that Credit Suisse is getting called out before UBS, but UBS is being okay. There's all okay. Let's backtrack and just try and figure out the chronology of what's happened this week. So UBS has basically delayed reporting to the SEC because they said we have some issues with our, we're not sure our accounts are reporting correctly. So, SEC said, well, okay, we don't need your shit, we don't need your crap right now. There's too much going on. So we'll give you time to fix your stuff because we don't need another bank being preyed upon. Well, of course that didn't go down well anyway. And so they have material issues on the reporting, and given everything that's happened with Archegos and Greenswell and everything else, it's like, you've got to be kidding me, right? And I pointed out the other day, it's like these reporting issues, Barclays got fined 200 million last year for having reporting issues. There's constant fines going on for banks that are not. It's a complicated business. Like when you have different, whatever. There's a lot of IT demands, and so you can understand these banks are going to screw up, and getting fined for letting traders talk on Snapchat or whatever the hell they're doing, where they should be using authorized communication devices that have recorded conversations. So they're getting fined for all kinds of silly things like that, which are not really silly, but they should be avoidable, but they're not, because the traders are always trying to find ways to get around it. So yeah, Credit Suisse, it wouldn't be a huge deal for another bank if it was just in isolation, but this is like one thing after another with another, and it's all been in the last 4 or 5 years. And again, with the background history I've already talked about it previously, it's like, yes, like you have a large amount of your clientele that's been involved in drug laundering and who else knows what else. So I don't really feel comfortable keeping my deposit at an institution. And given all the other stuff we just talked about with US banks, it's the same thing. It's like, yeah, money market funds are now paying better than deposits. Why do I want to keep my money at this institution? And you've had significant deposit holders at Credit Suisse basically say, I'm done with this place. I'm going. And as a result, they've been seeing capital flight. So it doesn't matter that the Saudis came in. Abu Dhabi and Saudi Investment Authority basically came in and, whatever, 500, sorry, it was over several $billion. I think it was 500 million shares. Let me just see if I've got this up on. Yeah, between the two of them, it's like 670 million shares. So several $billion. And, despite that, the capital flight continued. And then, the share price kept dropping. The CDS kept going up. It's like, and it was inverted. The CDS curve was inverted, saying that we believe it's more likely that Credit Suisse is going to default in the next month than it is in the next 5 years. So that's really telling. So this was kind of like, it wasn't a no-brainer. Like when we were talking in November, October last year, CDS was elevated, but none of these the deposit flight wasn't as apparent back then. So it said I thought this was like, yeah, this is a pretty big sign that they're going to go, but it's not going to be immediate. And I didn't expect the Saudis to come in, so that may have bought them a month or two extra. But yeah, here we are. 4 months after or 5 months after we had that conversation, and Credit Suisse is being supposedly bought by UBS. Now, here's where it gets ridiculous. So there's been all kinds of stories about what's going on this weekend. So last Wednesday, when UBS said, "Oh, yeah, we want nothing to do with Credit Suisse," and then it was like Thursday, okay, Swiss National Bank is offering a $54, billion liquidity line to Credit Suisse. But guess what? There was a portion of the Swiss political factions that didn't want to do this. It's like, why, again, it's like Europe regulators were furious because Jay Powell and Yellen threw up the deposit insurance book. So all of a sudden, yeah, Swiss National Bank is getting 53 billion to bail out Credit Suisse. It's like, well, do we agree with this? And so there was some question of whether the government really wanted to do this or whether they going to be able to do it. And so then it's like, okay, well, the next best case is we need UBS to buy Credit Suisse. So all of a sudden on the Friday afternoon, it's like, Credit Suisse financial people said to stay over the weekend, and it's like, oh, and then yesterday it's like, yeah, talks between Credit Suisse and UBS are ongoing, but they're not actually talking to each other. It's all being done through the financial regulator and the Swiss National Bank. So it's like a divorce in reverse. But it's like you're working through arbitrators. You're not talking directly. So it's like UBS. I'm sitting here going, okay, we know that UBS has its own issues. Their credit default swaps have also been going up in the same time that Credit Suisse has. But relatively speaking, they haven't seen the deposit base moving, and they've been more profitable. Whereas I think last quarterly report they showed like a $7 billion gain, and Credit Suisse showed a $7 billion loss. So it's like, relatively speaking, UBS seems to have its act together better. So yeah, it's like, okay, well, if we can't stabilize things, if people are going to keep leaving Credit Suisse, we need to bail them out. And so UBS is the preferred target because it's a domestic bank. It's also under our regulation, and we can sort of strong arm them. And so yeah, we're going to do that. We're going to force them to merge. And then of course UBS saying, well, well, you want us to merge? Well, you got to give us some guarantees here. It's like, and so the initial story was that UBS would buy them, but they didn't want to have anything to do with the investment bank. And oh yeah, we also want like $6 billion in sort of backstop from the national bank in case there's new legal issues from previous Credit Suisse transactions, i.e., who's going to sue Credit Suisse for other crap that they've done. and that's $6 billion didn't come out of nowhere. So somehow, somehow there is some risk still on Credit Suisse's books. But yeah, the interesting comment was we want nothing to do with the investment bank, and so if they plan is like if this were to proceed, we would basically downsize the investment bank so that the overall structure of both our investment bank and their investment bank would be 1/3 or less of the total organization. So it's just like Deutsche Bank, who's basically had to cut their investment bank dealings in the U.S. And focus on their retail network. UBS is basically saying we want nothing to do with the investment banking side of Credit Suisse, which is, again, probably the prime brokerage business, which has been closed. But the whole risk management behind that prime brokerage business is not clear if that was ever wrapped up. So when people talk about AMC and the credit default,
Archegos and stuff
yeah,
too.
yeah, exactly. It's like what is lurking on the books of Credit Suisse? Do we know that all the Archegos exposure was completely wrapped up, or has it been hidden in swaps? And I would bet that, yeah, if they were short AMC and they've being seen active in the dark pools for the last 2 years in AMC, selling AMC, then they obviously still have some exposure to AMC of some sort. There's no way of knowing what exposure they have, but it's dollars to donuts they have some exposure. And so, yeah, it's been sitting in their risk management process, and it's probably not. If the prime brokerage is closed, but the exposures created by the prime brokerage didn't go away. I mean, you still have to farm them out somewhere. So if you hadn't seen any significant coverage of AMC positions from that group, then yeah, they're still on the investment bank books somewhere, and they need to be taken away. And if UBS doesn't want the investment bank, then it's a question of how would they get the um, that risk off? Would they just unwind it and let the Swiss National Bank say, hey, this is an unexpected expense we didn't expect? Or, sorry, this is going to be very convoluted because I've got multiple points here. But so the other speculation is we know the Swiss National Bank has AMC shares. And I always wondered, I've been told, oh no, it's totally separate. It's like the Swiss National Bank is just spending capital. It has nothing to do with, Credit Suisse. But here's an opportunity. They do have AMC shares, and if UBS has to take on toxic liabilities of AMC shorts, then maybe they ask the Swiss National Bank, instead of giving us money, can you just give us the shares? So there's a potential twist there. I don't know if that's even feasible, but that's something that it could be part of this deal. But yeah, the other side is so they have this toxic thing, and it's like we want to get rid of this investment bank, and so they finally came out with a deal. Oh yeah, in the meantime, Financial Post, sorry, the Financial Times, sorry, came out with a story yesterday saying that BlackRock was looking to buy Credit Suisse. And it's like, okay, that's really interesting. And then 2 hours later, BlackRock says, no, this is totally false. And if it had been any other newspaper, I would have said, yeah, okay, this is typical. But this is the Financial Times. This is the most respected newspaper in the world, as far as I'm concerned, for financial reporting. So I don't know what was going on with BlackRock and where they came up with that story. But there's probably an editor and a journalist at Financial Times that's looking kind of stupid right now and feeling embarrassed. Unless BlackRock was involved, and again, it's all spin. It's who knows. But anyway, so BlackRock is not involved, has nothing to do with this. This whole transaction was basically strong-armed by the Swiss National Bank. It has no outside bidders, so it's basically like, again, they said we do not want this to escape the Swiss system, so we want UBS to buy them. But then so UBS is saying, well, you want us to buy them? Well, I'm not paying more than $1 billion for this, and that's that. So that was like, that would put them at 25 cents a share, whereas Credit Suisse closed on Friday at like 205, I think. So it's like that's a huge, huge, huge discount, and that would be a benefit for for UBS. But would it be? Like, we don't know. No one knows exactly what kind of crap is at Credit Suisse. So I don't blame UBS for lowballing their initial bid. In fact, I posted on Twitter that I think they might even be overpaying at that price. So just like Bank of America was strong-armed to buy Merrill Lynch, and only after the fact did the Merrill Lynch's exposure on some dubious mortgage-backed securities products come to light. So, and again, like, UBS has not got all the information. They're not even talking to Credit Suisse directly. So any information they're getting on sort of the value of Credit Suisse is coming through the Swiss National Bank and the regulator. So if the regulator isn't noticing stuff because it's been hidden or like not described correctly, then UBS doesn't have all the information. So who knows what they're buying? So they right to be cautious. But anyway, then of course the Saudis and the Abu Dhabi and every other shareholder is basically screaming in like squealing, we're not accepting this. It's like, And then, okay, the reaction function from the Swiss was like, well, we'll nationalize, because so if they nationalize, basically everyone gets nothing. So it's kind of like chicken, or who's going to blink first here, and it's been again, I've been totally my brain is fried because of all the headlines coming out. It's like, but yeah, it's basically like last minute game playing, high stakes poker. But the Swiss seem to think they have all the trump cards. So anyway, that's where the nationalization story is coming from. It was basically to tell the Saudis and Abu Dhabi's guys, you guys are out of luck. It's going to happen whether you want it or not. But I think there is an element of politics going on here, and it's like, do you really want to aggravate the Saudis that much? And the geopolitical span of things, the Swiss are not that stupid. So it's like, yeah, okay, UBS, you've got to be more generous. You can't pay $1 billion. You have to, and so, okay, so some internet gurus chimed in saying, I will pay 1.5 billion. It's like, yeah, like, go away. But I think that was sort of like indicative of the fact that, yeah, that was a lowball bid by UBS. So the new deal is now $2 billion. And that seems to be, I guess, more acceptable. But again, it's like, again, FT's reporting on this. There hasn't been any other journalistic source that I've seen. So, but I'm trusting the FT. So they're saying that 2 billion will go through and get signed tonight. Now, there was a clause in the initial 1 billion offer where it said if credit default swaps for Credit Suisse in the time between the deal announced and signing, if they went up by 100 basis points, the deal's off. And it's like, wow, that could happen very easily based on credit default swap markets. But then someone on LinkedIn that I respect basically put out a post saying, look, the Swiss National Bank wants this to happen, so they will lean into the credit default swap market and make sure it doesn't pop up. And I believe that, so they again, this, like, there's two choices here. Either UBS buys this thing, whatever price is decided on, 2 billion or whatever, or it gets nationalized. There's no third point. The Credit Suisse goes bankrupt, and 50,000 people out immediately.
Yeah, I was gonna say, or bankruptcy. So the next thing we want to get into real quick is thoughts on the AMC, the vote getting passed, and do you think the court will drop the case?
God, yeah, no. There's a lot of people on Twitter talking about this, and some of them are a lot more informed than I am. So the vote passed, yes. Obviously we know the 87% yes vote, which is giving it. The quorum was met. The question is, and I guess the issue is not just whether the preferred shares should have had voting rights to begin with, but it's also the status of the computer share, the agent for holding for APE, and whether the proportional voting that was implemented was legal. Now, my view is that the AMC has already had an outside law firm look at all this and say, yeah, this is fine. So why people are still thinking that this won't fly and that Adam Air will get a big egg in his face by screwing up, and like I just, this has been a long term in planning. I don't know why people like assume that Adam Aar's an idiot. I'm not a huge fan of Adam in some respects. I mean, I'm still pissed with June 21. Like I said, I do not think he should have sold the shares at whatever $50 or whatever he did. So that killed the momentum. So I'm not, like, people seem to think I'm Adam Aron cheerleader. Yeah, he follows me. I follow him. I do make supportive posts of the company, but it's like, yeah, he's not perfect. But in this sense, I think this whole ape thing was created over a long period of time. He'd been tweeting about, his little chess references were all about checkmate, and these were happening months. So he's put a lot of time into, thinking about this. And I don't know whether it's 5-dimensional chess or whatever, but there was a lot of thought into this. So it wasn't surprising me that the outside law firm basically said, yeah, you're fine. So this whole lawsuit to me always felt a little spurious, because it's at the last minute for one thing. And it just felt like a delaying tactic, and I still believe that. But looking at some of the other people's posts on how the whole reverse, basically the conversion will happen, and how the QSIP will be, it has to be, you can't just, we've talked about this, you cannot just ignore these shorts. They have to provide APE so that conversion can happen. So like you cannot have this disappear. These shorts do not disappear. They'll be registered somewhere, and they have to be accounted for if there's a new QSIP. So I guess I'm going with that. And like, yeah, what happens with the next 7 weeks? Because my question, and I haven't really seen anyone address it on Twitter, is so Adam Aaron put in a motion to dismiss, and basically it was a pre-written form. All the judge needed to do is date and sign it. So can that happen before April 27th? If it happens before April 27th, we just walk in one day, we see a headline saying, judge dismisses, with prejudice, whatever this whole lawsuit. And it's like Ape immediately screams higher to where AMC is, and then everything converts the next day. So can that happen? I don't know, because no one's told me whether a motion to dismiss can happen only on the date the judge has said. So if it's 27th, the judge considers all the motions on the 27th. I'm not a legal system expert in the U.S. Watching Boston Legal doesn't equip me for that. So I don't know what the
Yeah, I don't know either.
but that's my question. It's like, but like, it seems to me if you're shorting AMC and you're shorting Ape, and there's a possibility that the judge can basically, rule the whole suit like null and void immediately. It's like that's a huge risk. How do you hedge against that? You can't. So I would be very weary of staying short. But who knows what's going on? And people ask me, what's Antara doing? And I have no clue what Antara is doing. I mean, I could guess. And to me, it looked like profit taking. It's like, oh, they can jump this 107 million shares. Why didn't they dump them all on the vote day when there was buying momentum? They only sold 48 million. So what is their plan? Like, oh, but
I think it just took away the risk factor. They just de-risked their entire bet. Now, if it does run, they got stake in the game, and if it does go down, it's still profit at no matter what. So it just takes 100% risk out for
that was my guess, right? It's like that's a logical explanation. But then you see certain YouTubers saying, "Oh, they're going to dump 170 million this week, and they're going to drive it so they can clean up and buy Ape at 50 cents, and they're going to drive AMC down." This, I should know better. I try and watch a lot of sources to keep up to breast, but at some point it's like my brain is like revolting. I feel like it's like watching a really bad movie. It's like I gotta watch. Like Nicole Kidman did one called like To Die For or something. I can't remember. It was like I walked out of the movie theater. It was so bad. So this is how I feel about some of these YouTuber videos now. I just can't even watch them anymore. It's like I try and keep an open mind, but it's like at some point it's just like I just want this over with. Like that's, to be honest, it's like 7 weeks is a long time for me to put up with all the kind of nonsense I see on Twitter. It's like there's just so much. Yeah, it's a rant I won't get into.
Oh, I hear you. I deal with it all too, man. But like here's the thing right now, everybody's talking about and complaining about, well, since the vote passed, the price has dropped, it's dropped. Well, of course it's dropped. It's common sense. If I'm a short and I know it's going to convert over, of course I'm going to, hammer it down as much as I possibly can before the conversion date. Why wouldn't I? So then when it converts, I'm not as red.
And that's it. It's like they're hoping as they knock it down that some people do get out, or there's like, I've talked about this with Nutso a lot. And so, I was saying, well, no, everyone with margins got to be cleared out. But no, I think what's happened is like people are still buying AMC on margin. And my bigger fear is people are taking like, I'm a lot more of my cash is taking up rent and food, but hey, I got lines on my credit card. I'm going to go borrow my credit card and buy some more AMC. And those are the people that are more vulnerable, because when AMC gets knocked down, it's like, oh crap, I got to make bills. And I was hoping AMC would run, and it hasn't run yet. And I got to sell those AMC shares now, taking a loss. And I don't have as much money, and I still owe money on my credit card because I borrowed 1,000. Now I only have 500 left from AMC, and I gotta, like, how am I gonna deal with all this? So that's my concern, and that's why I'm really angry with the shorts, because like they just know that people are gonna be listening to certain influencers and doing certain things and taking exposure at prices, thinking a bounce is going to happen tomorrow. It doesn't happen, and then they get screwed over as the hedgies knock it down lower, and then the vulnerable ones that have to sell. So yeah, like I do believe this is a manufactured. This whole delay, this lawsuit has created another 7 weeks for them to basically screw people over, is my view. So I
Did you see that retirement plan received payment from BlackRock in the past a couple months ago?
Sorry, what was that about BlackRock?
They actually made payments to that retirement plan a couple months ago.
Okay, yeah.
Yeah, I was going to post that. Christina put that up a while ago, and she posted them all. But yeah, so I was like, kind of a coincidence.
Yeah, Allegheny, and that's the thing, right? we've pointed out like the low ownership they have, and how much of a stake they really have, and that again, it's like a problematic lawsuit if you've got such a low interest in this play. It just, and then there's people that are absolutely advocate that this is a legitimate, it's like, okay, I'm not even arguing with you, and people I'm not even angry, like, I have people that DM me that I've exchanged DMs with over the last 2 years, and they're in the camp that this lawsuit is totally legit. And it's like, oh God, I don't have the time to try and educate you on it. So yeah.
But those are the same people also that are saying I'd rather see the company go to zero than have the shorts win, which they win by it going to
Yeah,
zero. So
exactly. That individual I'm not sure whether he's been duped by a certain faction. Like again, I don't know whether he's conscious or not of how stupid he sounds. So um, it's really problematic though. It's like I do feel that this delay has been created so that they can screw more people out of their shares. Like they said, it's not. A lot of people are just happy to buy and own, and they know the risk, and they're not happy, but they're saying I know where to go. And like to me, it's like, yeah, this is a point of pride now. I'm not. I know we're in the right. I don't want to wait another year, but I'm prepared to wait as long as I have to, because like I said, I had to wait 6 months to be right about Credit Suisse, right? So this is going to happen in some form at some point. And again, the amount of FUD that's going on Twitter, and the stupid articles we continue to see. If this was a dead play, then we wouldn't see all these stupid AMC stories still. So you wouldn't see AMC whatever electronics showing a lot. I know posting a picture of AMC theaters with the other AMC and a negative story. It's like, come on, right? And I'm exhausted. I'm exhausted, but I'm not leaving. So yeah, this is my whole point. Is this lawsuit has been designed to basically 7 more weeks of us being screwed over, and then the judge could vote no, and then who knows what's going to happen with this? It's going to be a total nightmare. I don't know what's going to happen. I can't even predict. But if they say yes, I hope it's with like total without like totally this is dismissed. Any further cases to this extent are also dismissed, and then we'll get our clarity. Whether it's like again, I'm not absolutely certain that we're going to rock it, but I do think based on the lower float, and again the new QSIP number, it has to have an impact on their positioning. And again, based on how they're acting, I do believe it matters.
yeah, I do too. I mean, like I said, I don't think that this plays dead in any way, shape, or form. Like you said, they're still putting out nonstop FUD about AMC. You see articles about AMCX, the network, failing or firing their CEO, but yet they put pictures of an AMC theater on it, so it looks like it's us. It's and like you said, there's never been covering. It's been years of nonstop buying. I don't know where it's all hidden right now. I feel like they're pushing back margin requirements. I mean, I feel like people should have been margined many times over, but I feel like regulators are still trying to get this to a point where they're like, all right, if this does explode, we can't let it take down everything, like you were saying, and that's why I think they're trying to delay so bad to get these CBDCs in and pay us in a digital form.
And yeah, like I was going off a side tangent. So another annoying comment I had yesterday. It's like, well, you know, running regional banks. Oh, 50 regional banks in Warren Buffett got together or whatever, and regional banks say that every bank should be, deposits insured for at least 2 years. And I said, yeah, okay, here we go. How are we going to pay for this? And I said, I'm going to buy gold stocks on Monday morning. And then I got all these, aside from the Bitcoin crowd, which is predictable, I should have known that was going to happen. But then I got like, oh, you obviously haven't seen like how gold stocks perform in a low liquidity environment. It's like, yeah, I know they've been underperforming the metal. I know. It's like, I said, well, is this going to continue though? And he said, yes, it is. And I said, well, okay, let's talk about a low liquidity environment. There's $2 trillion sitting in the reverse repo account. Uh, is the Fed going to keep hiking? But even if they do hike, it's possible that they know there's a low liquidity environment based on what's going on with the banks. So they might just reduce the rate on the reverse repo, at least put it back to Fed funds. It doesn't need to be 5 basis points above it. So there's a source of liquidity. There's $2 trillion sitting there. That would help a lot of liquidity. So like, and then yeah, like stocks should, like if I see reverse repo going down, then that's my clue that we're at the bottom. I don't know if the Fed is desperate enough to do that yet. And yeah, like it would be sort of counterproductive too, because if you unleash the reverse repo, then basically they're not getting that collateral that they were getting from the reverse repo account. So then that would cause a lot of people to have to reduce their margin positions. Like so Citadel is using treasury collateral to fund their shorts. And so yeah, like it would be like, again, I would celebrate if I saw any kind of significant drop in the reverse repo, because I said, yeah, this is it. This is the game. The game is about to go for us. So until that happens, but yeah, we'll see what the Fed does on Wednesday. And usually, there hasn't been any mention of the reverse repo account in the last few press statements, but I do think it's something to keep aware of. To me, that's a huge problem solver for them if they want to use it.
No, I agree with that. The next question somebody had on, they wanted me to ask you, is there such thing as smart dilution, or does all dilution just help shorts? Can you please clear this up? Because it's one of the number one thing on
Oh
Reddit.
God, yeah, I'm not. I don't have a strong opinion on this. Of course, Adam Aaron has said that there is smart dilution, and he's pointed to the fact that when they have sold shares in 2020, 2021, the share price went up. So I keep thinking about that, and I said, well, again, for me, it's very personal because I was literally up at 2 a.m. on whenever June 2nd and watched the price. I was watching on Interactive Brokers as it went to $72, and I had I think I even took I sold 20 shares or something. I said, yeah, it wasn't huge, but I said I want to just take a little bit of cash off the table. And then the next thing I know, I went back to sleep. It was 2 a.m. So I went back to sleep, got up at 6, and the share price was $52. And I'm going, it's been going up from 12 up to 72, and I'm wondering what the fuck just happened. And it's oh yeah, AMC just gave Citibank 10 million shares or whatever. It's why did you do that, Anna? So I don't know if that was good dilution or bad dilution. And I do the whole move back in 2021, to my view, was more Mudrick Capital getting caught on selling short dated calls and basically being told by the risk group to kill them all. So Mudrick, it's very complicated because Mudrick got 20 million shares. The next day they dumped them, and the share price went up. So was that good dilution because of the share offering? And there was a lot of demand from retail and elsewhere to buy AMC. So having real shares, was that good? It's all very complicated because I don't think anyone really has a clear understanding of exactly what was a gamma squeeze versus what was the good dilution, versus Mudrick basically getting stopped out of all their calls, short call positions. So I'm not clear on that. I do think, however, that there is some point to be made. And again, even sorry, I'm going to mention him, but Lou from Boston. Lou made a ridiculous point last year where he's saying we're buying synthetics. We shouldn't support them. We should not be buying anything. We need real shares to have a price that moving upward. And so at the point, he was actually replicating what Adam was saying. And I do think about that, thinking, yeah, if real shares are what really, if they can't cover unless they have real shares, then they're not going to aggressively buy until they know there's real shares out there. So from that perspective, I do wonder whether that is what we are waiting for, is they can't cover because there's no real shares because no one's selling the real shares. So I guess at this point, I'm keeping an open mind on that. I'm not against the idea of good dilution. But I can't conclusively make a case against dilution being bad. I do not believe all dilution is bad, but I do not know if I'm 100% supporter of Adam's view either. So I'm sort of still on the fence, I guess.
Okay. Yeah, I mean, the way I'm looking at it is there can be good dilution. I mean, and it doesn't necessarily just help out the shorts. Let's say that, he dilutes the shares at a good price. He makes a good return on it. Doesn't necessarily mean just because more shares are out into the float that shorts are going to go out and buy them. They might double down on their position or now say, now that the float's bigger, we're going to short it going. We're going to keep attacking. It doesn't mean that they're going to cover, but now you're putting AMC fundamentally in a better position. And if AMC is fundamentally in a better position, that gives them more incentive to cover because the short thesis then is actually killed.
That's the point that a lot of people it is the absolute point. It's if AMC is in a better position fundamentally because of the share offering, then that's not a bad thing. And that's why I basically went along with the yes vote, because I do believe that the entire conversion to a new CUSIP reverse split for a time being will allow AMC to issue shares at a more fair market price than selling APE at $1, right? So I'd rather AMC sell AMC common at a correct market price, be able to pay $500 $1 billion, pay down some more problematic debt, or use it wisely for acquisition purposes, sure, I'm not against that. So if that is what dilution does, then that is a good ultimate outcome. So yeah, like that's basically the underpinning for my whole agreement to voting yes. Is I do believe as long as AMC doesn't waste the money, then I think that's a good thing. And I've been on record. I like Nicole Kidman, but I don't know if she was worth 25 million. I still wonder about that. But that's neither here nor there. I mean, I do think 25 million is not that much big amount, but like, yeah, they need to get a substantial chunk of cash and they need to spend it wisely. And that's basically what I'm banking on. That Adam's not basically stupid enough to waste that. So.
No, yeah, no, that's exactly right. I mean, if he gets the dilution, doesn't spend it towards the right things, then yeah, obviously that completely helps them, and then pisses all of his shareholders off. But so the next question they were going to say is ask him if he thinks that he would dilute it, do a public offering, or do you think that he will keep doing dilutions through to hedge funds in these discounted prices?
So that's a great question, because if he does public, the problem is I think he's always under time pressure with these deals. He always feels like he needs to execute through a bought deal structure with a institutional player, because then he can get a lot of cash really quick. I think he's uncertain as to whether a public offering would he be able to raise a sufficient amount of capital quickly enough, and also if he wasn't able to get enough. Would that be with a negative perception weigh on AMC and cause short selling? So is it more dangerous for him to do a public offering, even though, like, you could go on Twitter and you have 2,000 people scream, yeah, Adam, do a public offering, we would support. And I think he knows that, like, he has got an asset in what he has in terms of his retail support. I mean, I do not know of any other company, maybe Tesla at some point, but like the amount of, like, look at the popcorn sales, right? It's insane. I love all the popcorn picks, by the way, guys. So fucking awesome. Excuse the language, but I don't know. Even if with all this demonstrated support, whether he feels confident enough to do a public offering. So I think he always errs on the case of, oh, I've got a guaranteed buyer here. Yeah, I'm getting a little screwed over, but expediency wins out, and that's been his whole game plan. It seems is like whatever is expediently most, and that's why I think he went to in 2021 Citibank 10 million shares done. It's like, I understand it. It's not. Again, he should have. My view, he should have held out for better than. Well, I don't know where he sold them, but like, it was 72. It could have gone to 100 the next day, right? It's like second guessing him. It's always hindsight. We don't know. But my feeling is that he could have done better by waiting, and said he could do better by doing a public offering. But I think he likes the guarantee. Like, at this point, it's like every dollar is important. So it's like, yeah, I'll try and get what I can right now, as opposed to leave it to luck.
So you think he's going to do another thing to the banks and hedge funds?
Likely. He seems immune to, like, the criticism he gets from whatever Frog or whoever the hell is criticizing him about that. But I think he's saying, I'm the CEO. I know what's right. I didn't listen to cohodes. I was glad I didn't. So he's always basically doing. He's going to disregard criticism that he gets from the Twitter crowd, even though, like, he says he listens to us. But in this regard, I think he knows his own mind.
And then the other one, I guess we pretty much already went over that. You still think MOAS is on the table for AMC?
Yeah, like, I don't know what that looks like anymore. I mean, like, again, it was there. $1 million a share was never on the table. Sorry, Al from Boston. Even 100,000.
Here, let me rephrase that. They said, do you think that the 72 will be an all-time high for AMC?
That was sort of, I was alluding to earlier. There's so many things that have changed in this whole play that it's impossible to know. I honestly, if you look at the short interest, the known short interest is still 25%. The cost to borrow is very high already. Anything that would flip this thing to it in a short covering could easily go, like, you looked at whatever that HKD went to $2,500, and that was, again, a manipulated stock. But I do think at some point, like, when this thing goes, we don't, like, it only went 12 to 72 happened in 3 days, I think, in 2021. It might have been 2 days. I can't remember. It was a glorious to watch. I remember thinking, like, God, and I've only been talking about it for 3 months. It's been 2 years. So the biggest issue with another run is always comes down to how many people are in this play but are really suffering. And it's like, I just want to get out at flat, so, like, how many people sell at 50, how many sell at 40, how many sell at 60? It's like, oh, I bought at 20, I'm triple money at 60. Well, that's good enough for me. The contrary to that was, well, how many people are actually in this play? And so if 20% sell, does that matter? Like, how big is a short? How big is it? And I said at 25% of known short interest, that's still significant. And if there are synthetics, and contrary to Sean Williams, I do believe that there were synthetics way before the ape issuance. Sorry, Sean. Um, so I do believe that there still are naked shorts out there and significant size unknown. And people talk about the ape vote was supposed, or the conversion vote was supposed to show all the shares. Like, I'll be honest, I never actually got my documents from Scotia, and I know a lot of Canadians never got they had to force the vote. They had to force getting a control number. That should have been, like in previous times, I had my AMC shares for the votes previously. I got a letter in the mail, basically asking me to vote. And then I got an email saying, or got a web address saying, click this if you want to vote by email or whatever. So this time I did not get any of that. So I do believe that somehow when I transferred from my old broker to my new broker, I got synthetic shares. So I don't know. I mean, it feels very weird that I did not get any documentation on this vote at all. And a lot of Canadians in the same boat, a lot of Europeans in the same boat. So don't tell me that this vote was clear of like no synthetics, because I do believe a lot of people didn't even get vote instructions.
No, I know a lot. I know a lot of people didn't.
Yeah. So as it means, whatever price we see, 72 is possible. I don't know what the look like. Does the Fed intervene and say, "Hey, you're all getting $100 a digital, $100 a share via digital dollar"? I don't know. I mean, it's possible.
And somebody's asking about phase six, and I mean, I believe that phase six is contributing to some of these banks closing. They're not able to open up new new contracts in the back end, create without depositing collateral. They now need to have collateral to open new contracts, which we can see they currently don't have. Do you think phase six is doing anything,
like I said,
or do you think phase six was
this whole
incorrect?
banking crisis was supposedly a liquidity crisis, but it's not just the Fed raising rates. It's also the fact that a lot of the collateral that wasn't allocated properly in the past is now having to be found, and so that's contributing to this liquidity crisis. It's there was so much liquidity, guys. There was just so much liquidity that the Fed pumped in that even with phase six, it takes time to materialize. Right? Not all these swaps reset at once. It's a gradual process over a year. If we're in September and this play's still ongoing, I'd be surprised. But like again, I don't know. It depends on how these swaps were grandfathered. But it could take a year. It could, whatever their weird swap that resets every 2 years. Who knows? So, but yeah, like as the collateral comes due and they don't have it, then they have to go find it. They have to close some positions. Liquidity becomes scarcer. A lot of the risk has to be deshuffled. So yeah, I do believe it's a slow interactive process. And like the part of me wanted, when you started talking about it last year and I thought about it, it's like, yeah, it would be great if everything happened on September 1st. But realistically, I knew that every margin call has a window of like, yeah, you got this call, but we'll give you a few days, so don't worry. Oh, you got a loan at the last minute. Okay, well, so yeah, like nothing happens instantaneously. And I mean, God, look at Evergrande. So
Well, not only that, the one thing I always point out too, sorry to cut you off, is you guys got to remember, 2 days before phase six, Citadel went and opened 8 massive ISDA contracts. They did that for a reason, and like you said, it's going to be. This is why when I first started talking about phase six, you need 3, 6, 9, 12-month contracts. They have to expire first. They're grandfathered in. But when they expire, now that they don't have collateral to go open new contracts, that's why when I first started talking about this, I believe the 1 year mark is when phase six is really going to smash them.
Yeah. No, that's a fair point. And that, unfortunately, a lot of people say, well, I mean, September 1st. And it's like, yeah, it does. So it's really hard to tell people to stay patient, and especially in this environment where they keep seeing the price get knocked down and down. And that's the thing. I do think phase six is significant, but for AMC's case, I think the April 27th decision may decide things ahead of time. So we'll see.
And then another person said, do you think it's possible to MOAS before October since they moved the margin requirements back?
Exactly. As I was saying, this vote is such a, if you like, again, I'm sorry, I don't know. I think the guy's name is Robert H. He was posting about it a day or two about like going through the QSIP conversion process. And if you think about, and we've talked about this before, it's just like the pressure for this conversion, what the catalyst it should, because they can go try and hide this stuff in the obligation warehouse. It still has to be like if AMC is a going concern, it's not valid to have obligation warehouse with a going concern. Like you can hide Sears in the obligation warehouse, no one's going to give a shit. But like AMC is a valid company. Adam Aron should question huge amounts of FDD sitting in the obligation warehouse. So I don't think they can hide this stuff. I think there has to be a catalyst way before October, and I think it's the vote. Sorry, not the vote. The actual judge ruling.
Yeah, in the conversion process. Yeah, Wired was talking about this a long time ago. He always thought that the conversion itself was going to end up being the thing to cause it. So, and that's the thing. You could see how badly they didn't want this vote, and most of the people that didn't want it or said no, it was always for just childish reasons, or they didn't understand anything, or I'm not helping out the shorts. And yes, you do lose. Yeah. Yes, you lose your shares, and that's all they focus on. But the shares you have still gain the value of the shares you lost.
Oh,
so
I got.
It's a two-way sword.
I got so many attacks on that. Oh, it's like I don't understand how someone like Peter doesn't understand the math. It's like, yeah, I understand the math, all right, but I just don't have the energy to go educate all of you. So I'm sorry. It's like it got so annoying, and then you look at the actors involved, and like again, I was talking to Nutso, and she says, "You're too harsh." And I said, "Look, I have to be because I look at all these people that make these comments, and I look at their follower train, and it's always the same pattern. And it's like, for whatever reason, they like to make fake Cat Striker accounts, and so to boost up their followers, they have 2 or 3 different Cat Strikers following them. It's like, yeah, like this isn't obvious. Like you guys are being paid to do this, and that holds back to the whole Spence and crowd being paid by a certain hedge fund manager shorter, whether that's true or not.
Douchebag cojones. I'll say his name.
So yeah, like I find a lot of the noise is manufactured, and to be honest, part of it's fun to go, oh, what am I? I'm bored. I'm going to go. Who's making nasty comments about me? Oh, who are they behind this? But at some point it gets exhausting too. It's like I'm just like, come on, guys, this is silly, and it's funny because it does. Like I have had no troll comments in the last 2 days aside from like the Bitcoin crowd on my gold comment, but it's like AMC trolls have died off. They had their big spurt after the vote. The day before the vote, and the day after, and then no trolls. So tell me that wasn't a paid attack account. Like you said, they're not being paid to do any more attacks, right? So it's
well, then what can they really whine about now? There's nothing they can do until the vote happens. They can bitch, whine, and complain about it, but it's going through.
Exactly. So it's comical, but yeah. Ultimately, it's like there was like, I don't want to get in BAM, but BAM was hosting a debate about how the vote went. It's like, what's the point? The vote's done. It's like, no, yeah, I'm canceling this because no interest. Yeah, no kidding. There's no interest. It's over. It's like, oh my god.
After he just got me fucking banned a week before on Twitter with his little buddy. You think I'm going to come debate you? It's like, dude, it's okay to fade off into the picture here, my friends.
So anyway, it said we don't know how the judge is going to rule. The judge could vote no. Personally, I think it'd be odd for the judge to vote no, but I've seen other color saying like it's the issue for the no's that they believe they have a point is like, so Adam with Ape created an exceptional way around getting a shareholder vote to authorization to issue new shares. So the concern supposedly is, does the Delaware court want to encourage other companies to have creative CFOs that find ways of getting authorization to issue shares? And so they're saying the judge will vote no because they don't want to set a precedent for this kind of behavior. But if you look at obviously AMC shareholders are happy with this whole process. So it's not like you can't, like in this case, it's like if this was a toxic thing, the shareholders would have voted no anyway. So it's like, or they would have voted closer to 50-50. It's like, it's very, anyway, I'm not absolutely confident that the judge will vote yes and just say, yes, go ahead. But chances are she will.
But I mean, the thing is they voted on it in 2013, the creation of them. So how could he really go against what they already pre-voted on? And then they see the vote results now, and they see that it's such overwhelming yes. I couldn't see them saying no.
That's another point. It's like people always people seem to deliberately forget the fact that the preferred shelf existed in 2013. It's not something that was dreamed up 6 months ago, right? So, yeah.
Yeah, that's the only reason why I don't think, just because they voted on it in 2013. So it's like he's using the tool you gave him, and now he's using it, and you're going to say, no, you can't, because why? It was too long?
Yeah.
For a time
Yeah,
period or what?
I know. So, I just I personally want this over with. This at least episode of it. The conversion has voted yes. Whatever. 7 weeks to go. More torture. More hedge funds screwing around with the share price for 7 more weeks. Great. Let's go. I'm happy.
Yeah, no, I agree. Just expect it, and then, like you said, expect everybody who's in the FUD to do nothing but cry about the price, not give you a reason why. Like I said, if you were a short right now, you saw the conversion, you're going to hammer it as much as you can because it's going to be just like you did with Ape. You crushed Ape as hard as you could. Why? Because it could kill your short thesis, and it was a way for AMC to get
Oh
out
yeah.
of debt. And by doing that, you get out of control of the short sellers like Antera and everybody who owns our bonds and controls our company in the
Yeah.
back end. You also saw with the bank that dropped that requirement that they actually can control what AMC can and cannot do with their money, how much they can and cannot have at a
Yes.
time. So it's a big deal to have these short sellers in our back end. So getting this vote through, getting out of debt is a
Yeah.
massive deal.
That's a great point that people overlook. It's like, oh, Adam's working for the. It's okay. I've been in banking. You've been in treasury departments. Like, Adam's got to be pragmatic, and he's got to work with the same people that are attacking him. Like Antara is obviously all over the place manipulating this thing. So it's not like Antara is our friend, but your friend, the enemy of your enemy is your friend. And if the purposes coexist, and yeah, so getting the permission to like get the covenants off so that I can do some stuff with my financing that I wasn't allowed to do. That's an advantage. So what do I got to give up? Oh, like I got to let Antara sell 20 million shares and knock Ape down. It's like, yeah, okay, I guess I can put up with that. And it's like the shareholders don't like that. Hey, I bought Ape at $3. Now it's at $1.70 or $1.40. It's like freaking Antara. And Adam Aaron's working with Antara to screw me. And it's like, well, the optically, yeah, that's exactly what happened. But on the other hand, you missed all the benefits that Adam got longer term. And that's the biggest issue here. And I keep pointing it out. Is like Adam Aaron is working long term for the benefit of the company. A lot of shareholders are looking for short term benefits, and it doesn't align all the time. And it's frustrating for someone that's in this play for the short term. And let's be honest, almost all of us initially got into this play for a short term, gain. We never expected to be here 2 years later. So that's a legitimate. I can like when I see people bitching about it. I I don't say, oh, you're a shill or anything. I understand. Like sometimes though, you do see shills impersonate people like that, but on the whole, I do understand the frustration. I do get it. So
Oh yeah. I mean, like you said, we all got in it for short play, but that's the thing too. Y'all learned a very valuable life lesson. Nothing's guaranteed on a short play just because some tubers got us all into it right away either. You know what I
yeah,
mean?
no, exactly.
But it's like everything, nothing about this bet says we're incorrect. With all the manipulation, with how long this has gone on, with the short percentage still that high.
Yeah. Oh yeah. I just reminded something. So back to Swiss National Bank or something. So this whole UBS purchase of Credit Suisse that normally would have to get approval from UBS shareholders. So because this is apparently such an urgent matter, the Swiss National Bank is working to the Swiss government is working to remove that requirement so this deal can go through without shareholder approval. So like if you're a UBS shareholder, you've got to be wondering, am I getting screwed here for the benefit of stability? And that's why I think again the $1 billion lowball price. So paying $2 billion is still lowballing, but like yeah, like this is like shareholder rights sometimes get stomped on.
Oh yeah, and I mean, like this whole thing is just a joke. I mean, they had to bail the bank out basically. That's giving them the money to buy this, so it's basically the taxpayers are already bailing out a failing
Yeah,
bank
yeah, and
again.
that's
But
yeah,
instead of it doing that, instead of it, they're just giving it to another company. This is what I'm saying. This is what's getting fucked up. It seems like the government is basically picking corporations to be, hey, you can absorb these guys, or you get these guys, you get this, you get this. Like they're like making monopoly
yeah, and
powerhouses
that's
at
exactly what
the
happened in
snap of a finger.
2008. Like J.P. Morgan was told to buy Bear Stearns, and they bought Bear Stearns for, if I remember the chronology correctly, it was I think Bear Stearns was trading at $20 or something, and they bought it for two or something ridiculous like that. So, like J.P. Morgan acquired the entire physical silver bullion and gold facilities of Bear Stearns, who had been the biggest precious metal player. So J.P. Morgan overnight became the biggest precious metal player. So, like, yeah, this is standard Fed playbook. It's like we'll strengthen the banking system by forcing one of the larger players to buy a weaker player, but will also give them all kinds of sweet little benefits on the side so that they won't be harmed, and therefore will strengthen the banking system. Oh, look, I'm Ben Bernanke. I've just done the world a favor. No, you haven't, Ben. You've just concentrated economic power in a smaller group of entities, and that's exactly what's happening everywhere now. So.
And then one of the questions somebody really wanted me to ask you was about Canadian pensions. Do you think Canadian pension funds are at risk at all, or do you see any
Okay,
type
so that's a
of?
great question. So I was just looking at the biggest 40 largest holders of Credit Suisse, and Case Depot, Quebec's pension plan, is long like 3 million Credit Suisse shares. So there's not going to be total insulation here. Um, but yeah, like if you look at the biggest, the Canadian pension plan, which has basically been funded by, in context, like 20 years ago, Canadian pension plan was underfunded. Like the government sat here and go, oh, we've got a lot of baby boomers retiring in 20 years. We don't have enough in the pension plan to pay for all of them. So they decided to do a massive tax grab, and they basically increased our pension contributions off our paychecks. Like it just tripled or something ridiculous like that. And so like when I first started work, I didn't really care about my pension deductions, unemployment insurance deductions. They were minor, but they've gotten huge over time. Like it literally, I sit there waiting till mid-year when they stop coming off my check, because for the first 5 months of the year, it's like a significant hit to my income, and all that money's been developed to pump up the Canadian pension plan to be this huge behemoth. And so now it's huge, and it's got investments everywhere. It did not have any money in FTX, thank God. But I don't know what its exposure to Silicon Valley Bank was, or to Silvergate, or to Signature Bank. So there's definitely a risk from the Canadian pension plans that they. I will say that the main thing, they do try and concentrate in private equity, which is, it's not clear how stable that's going, and they do private infrastructure deals. So they do buy a lot of toll booths and ferries and stuff like that. So power generation companies, utilities. So on the whole, I'm not particularly worried about Canadian equities, but there is a case to be made. Like there's a Canadian, it's a little close to home. There's Alberta has what's called AIMCO, Alberta Investment Management Corporation, and it manages the pensions for a lot of Alberta teachers and stuff like that. And they got caught 2 or 3 years ago when basically the market was going straight up. They were selling naked calls, like really stupid thing to do. So they were selling naked calls. I think they were also selling naked puts, but they were basically selling vol. And this was basically when, so the VIX was stable, because when the equity markets keep going up, there's a little volatility. But they kept selling calls, and of course, Will Hang and people were basically, SoftBank was going crazy buying calls and jacking up. So basically, AIMCO lost several $billion selling naked calls. So it's not unprecedented for Canadian pension plans to screw up like that. So I can't say that everything is fine, but I'm not. It's not something that particularly worries me too much. Like I don't worry about my pension, even though in my current role I have a defined benefit pension, which means that I really hope, like, I have guaranteed pension payments when I retire. So I hope they don't blow up, because I like those. That's the reason I'm at my current job. So anyway, it's a concern, but it's not a huge concern. I guess I'm more concerned with the U.S. funds at the moment. The U.K. pension system obviously nearly blew up last year. The U.S. pension system has got similar vulnerabilities, and again, this whole bond losses from banks illustrates the same problem that the U.S. pension plans have.
Thank you for answering that. I don't know if I have any more questions for you at all. Is there anything you want to go over,
Uh,
or anything you want me to talk about,
no,
or
I think
anything?
I think I covered all the landmines. Yeah, as I said, it this, like, everyone's focused on Credit Suisse this weekend, but yeah, First Republic. This whole thing about, like, the Warren Buffett going to Washington. Mr. Buffett goes to Washington. Whatever. He gave Goldman like $5 billion in 2007 or something, 2008. I can't remember. But so if the Sage of Omaha is involved, it's like, oh, we've gone to the well here. But I don't know what he can or cannot do with his own money. But apparently he's, like, there was people tracking all these private jets going to Omaha on Friday or whatever. It's like, and like
Mm.
So whether PNC Bank and SunTrust Bank and all these other mid-sized banks were flying to Omaha to task Warren what to do, um, and their solution was to tell Congress we need 2 years of deposit indemnification. That's like I'm sitting here again, like I got all the Bitcoin people going, oh, because the idea is, how are you going to pay for this? You can't just blanket insurance. There's going to be losses, right? So how is this going to be financed? Oh, the deposit insurance premiums will go up. Yeah, okay, that raises the capital cost of banks. That means loans are going to go higher. It means banks are going to. It's a cost to the system regardless if you do it that way, and that's going to basically slow down activity, which maybe the Fed wants. The alternative is you have to find money like they did for this Treasury bond program. They took 25 billion as capital backstop from the stabilization fund, but this whole like 2 years for all banks, that requires a huge amount of capital to backstop that. So where's that going to come from? And yeah, this stabilization account, like in this mystery stabilization account, I don't even